The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 3rd magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. I hope everybody out there had just simply an extraordinary weekend. It is great to be back with you as we come back here. The markets are all mean and green. You got the Dow futures up about 55 points right now, traded out at 13,062. The ES mini is up about 0.4% as well, up 6+ points. The NASDAQ futures up about 0.7%. Lead dog in the house, though, is the Russell 2000, up almost 0.8%. 6.5 points out there. King dollar back about 22 ticks right now, out at 79.93 out here. Gold up $3 and change. Silver up 35 cents. Silver making a move of about 1%. Light sweet crude up about 1% as well, up 90 cents. Trading out at 89.91. Our call-in number is 877-927-6648. Quick tour around Europe out here. They're having Oktoberfest. Of course, it's Decemberfest now out in Germany. The DAX up almost 1% here right now, up 72.8 points. The DAX taking on its highs. We'll certainly take a look at that chart. The FTSE up 14%. They're not really having much of a party. That's about 0.2%. Over in Asia last night, a little bit of a mixed bag. The Nikkei out testing its Gartley sell and butterfly sell pattern, not getting over it. Just another test of that area. Was up 12 points last night, closed out at 94.58. Over at the Hang Seng and the Shanghai, both down over 1%. The Shanghai was off 21 points, closing out at 2,051. The Hang Seng closing out at 21,767, down 262 points. So let's go take a look at one of our tools. I love this tool. This tool here is called Wisdom. Wisdom is born from mistakes. Confront error and learn, Confucius say. Norman Cousins once said, fortunately or otherwise, we live at a time when the average individual has to know several times as much in order to keep informed as he or she did only 30 or 40 years ago. Being educated today, folks, requires not only more than a superficial knowledge of the arts and sciences, but really a sense of the interrelationship of the two, something not taught in school. In short, folks, education is required for survival. Now, there's a huge difference, in my opinion, there's a huge difference between acquiring knowledge and possessing wisdom. You can acquire knowledge several different ways. You can get it from universities. You can get it through travels. You can get knowledge through relationships, books. How about the Tiger's Den? If you haven't had a chance to check out the Tiger's Den, go to the homepage of TFNN.com. Click on the Tiger's Den. A ton of knowledge inside the Tiger's Den. How about TigerTV? Maybe you're listening to us on the radio. Maybe it's your mobile device out there. You can always watch an archive of this show on Channel 10 on TigerTV. Those are great ways in order for you to be able to gain knowledge. The question is, though, are you gaining wisdom? Is there a difference between wisdom and knowledge? Does wisdom come from knowledge, folks? Or does wisdom come from learning from your mistakes? Maria Montessori. Many of you may have sent your children to a Montessori school out there. Certainly her tools and teachings are taught in public and private schools all around the world. Maria called mistakes learning opportunities. I like that. Learning opportunities. You know, most religious scriptures out there ask a question. They say, who is a wise man or woman? Of course, I added in the woman piece of it. The answer, though, it's uniformly the same. He or she who learns from all men or women out there. To become wise, folks, we must suspend our personal beliefs. We must set aside our prejudices and we must have an open mind out there. Learning, most definitely, is the roadmap for knowledge. But mistakes, folks, mistakes truly are the highway for wisdom out there. Wisdom requires courage, no question about it. And as the great Robert Louis Stevenson once said, you cannot run away from a weakness. You can't, folks. You just can't. You must sometimes fight it or just simply perish. And if that's so, if that is really so, folks, why not now? Why not now confront any of your weaknesses out there? Wisdom, folks, it's born of mistakes. Confront there and learn. And I want you to have a really wise day out there. So let's go take a look at the wisdom here in the markets. We're going to do that by looking at the motion of the charts out here. As I said, futures are up. Let's go take a look. What we have on my screen here right now are the four quadrants of the 30-minute futures contracts. We can see that each of them getting into the overbought territory as we move into the opening bell out here. Let's go start off over in Europe, though. So let's start over in Europe, see what's going on there, because that probably will be the largest clue out here. We can see right now the DAX here trading out at 74.77. So when I say Europe, we're going to really start off in Germany by taking a look at the DAX. What you can see if you're watching my screen here, you can see the black horizontal line out there. That black horizontal line is an area of resistance. I've got it really shown here at about the highs from September 14th. What the DAX is doing today, it's taking on its swing point high right now from September 21st, 2012. That high, 74.78.53. The DAX here so far today got up to a high of 74.87.89. If the DAX at 11:30 closes over, I don't have volume unfortunately, if it closes over 74.78.53, the DAX could be breaking out. If it breaks out, folks, the question will be, where is it going? Well, if I just simply pull this down here, if you're watching on Tiger TV, first I'll just pull it back. You will see this rising price trend channel that it is in. The DAX here will at least head up to the midpoint. You can see this midpoint here. The last time really that the DAX, in fact, when you're taking a look at the horizontal resistance area, you can see the DAX made it up to that midpoint. If I were to really guess, what I would do here is I would take an expansion of swing points. So let's do that. Let's go from that September 21st high all the way down to the low that was put in on November the 16th out there. 1.272 is 76.22. I would say the midpoint, though, really would be 78.04 out there. Pretty amazing. It's only at 74.76 right now. Remember, folks, if you were listening on Friday's show, really gave you two different sides of the trade on the DAX in order to use the Nadex platform. So if you haven't tried the Nadex platform, you can always catch the archive of that show. I think it's on channel 13, if I'm not mistaken. But check out the Nadex show. I gave you a trade setup for both sides of the trade on Nadex using the DAX. And it was said that, look, if the DAX is going to break out, it'll have a 200-point move up. It's trading at 74.77. That would take in that 76 range here, 76.22 being the 1.272 expansion. Likewise, if this area holds here this week, what we will see is a 200-point decline, something pulling back into the rising price channel here. So today we're going to get some information. In fact, we're going to get information most certainly at 11:30. I wish I had volume for you. I don't, but we can certainly take a look at the candle patterns out here. You don't see many bears off of the move coming out here from November 16th, do you? In fact, you don't see really any bears that showed up here in the DAX on this move up. So important to always be able to take a look at strength. I talked about how simply wisdom is born from mistakes and just simply being able, you can't run away from weakness. So you learn from weakness. You gain wisdom from weakness out there. The Channel 8 is the show for the Nadex platform for the archives of that. But, folks, what you want to also do is you can learn, you can become wise from mistakes out there or from weakness, just as well strength. In this case here, we're going to be paying attention to strength by looking at the DAX. If we go take a look at the futures, let's look at the daily futures, see what we have going on out here. Let's start with the ES Mini, the S&P 500 futures. S&P 500 right now trading out at 1421.25. What we can see here is that it's a 0.618 retracement. Now, when you get to a 0.618 retracement, folks, it does say you need to be cautious. Now, need to be cautious, meaning from the standpoint, if you're bullish out here, what you need to expect is at some point here soon, you should be looking for some type of pullback. What you've got to determine is whether or not you want to go ahead and and sit through that pullback or not. Now, what you're doing here, what the ES Mini is really doing here, looks to me like it wants to get just a little bit higher. See that red horizontal line that we have going across the screen here? If you're watching on Tiger TV, the red horizontal line being an area of tested support out there, tested resistance as well. In this case right now, we're looking at it as being resistance. As far as the price point range, really pretty close to it. I would have to say we would take a look at really about the 1427 level. Could get up as high as 1431.75. That is on the ES Mini out there. So very close to a horizontal area of resistance. If you were to say, hey, Steve, where would this likely pull back to? Well, since it has broken inside the trend line, back inside that trend line, what we are taking a look at is a trend line going back to the October 4th level. The first likely test is going to be coming back and testing that trend line. That'll give you an idea whether or not the breakout that we had inside the ES Mini here, the breakout of that trend, whether that was real or not on your next test on the way back down there. If we go take a look at the NASDAQ futures out here, NASDAQ futures trading up 20 points right now. So let's go see what they are doing. They're trading out at a price point of 26.95.50 out here. What we can also see that little red line coming across here, again, an area of horizontal resistance. If you get a close today above the level of 26.94, what that says is that the NASDAQ will go ahead and test probably the 0.618 level, which would also be a test of the rising trend line. Now, that trend line here, instead of going back to October 4th, really goes back to the lows made in August of 2011. So August 9th, 2011, your touch point there was the low at 1972.25 out there. So that is an even longer-term trend line. More important to be paying attention right now, in my opinion, to the NASDAQ futures, to see what happens as it moves up into that trend line. Does it get rejected? Does it get rejected as it comes into that 0.618 area, setting up a larger A to B equals CD down, or is it going to get back inside that trend? Let's go take a look at the Russell 2000 out here. Russell 2000 leading the charge up by 0.77% out there. And why the Russell 2000 is that important? Well, it's kind of interesting. We know that higher taxes are coming, don't we? And so we know that there was certainly, or we believe that there certainly was some tax sales going on in the marketplace as Apple was certainly making its highs and moving on back, and part of the correction. So if we now know that taxes are certainly going to go up out there and we don't see selling in the marketplace, you have to say, maybe there's a rotation going on. Maybe that rotation, folks, out of stocks and S&P and maybe into the Russell 2000. The Russell 2000, if we take a look at that trend line going back into the October 4th level, you will see the Russell 2000 on Friday as well as today testing and trying to get back inside that level. You'll see that horizontal area of resistance. I think the Russell is something we pay attention to. The DAX is something we pay attention to. And most of all, you folks love to pay attention to. You can give us a call at 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And in the pre-market here, leading the charge, the upside, Apple. Apple closing out on Friday at $5.85, trading out right now at $5.94. Decker's Outdoor. Decker's Outdoor, DECK, is the ticker symbol. Don't see any release of numbers out here. They closed out on Friday at $38.29. They're having a nice move here this morning, up trading out at the, wait a minute here, I got to get the right ticker symbol. Closed at $38.29, and they're not trading at $5.94. That's Apple. They are trading out at $42.40, so they're having a nice move this morning. Dell is up in the pre-market as well. They closed at $9.64. They're trading at $10.33 right now. You've got, let's see, Citigroup closing at $34.57. $34.57 on Friday. They are trading out at $34.90 here. Intel is up this morning. Facebook is up a bit. Facebook closing at $28 even. Steven, just at $28.17 right now. To the downside, let's see if there's anything large out here. You've got McMoran Exploration, MMR is the ticker symbol. They closed at $8.53. They're trading out at $7.65. Right now, you've got Yahoo trading off just slightly. Strong looking equity out there. They closed at $18.77, trading down at $18.49 right now. You've got Goldfields, GFI, back just a bit this morning. They closed at $12.28. They are trading out at $12.03. Let's go take a look at the currency market here. Let's start with the euro. We've got the euro trading out at 130. 371. That is really Johnny on the spot here at the 0.786 retracement. We can see if we take a look at retracements off of the most recent high, which was October 17th, made a high of 1.31383, makes a low coming into the November 13th level, gets down to a low of 1.26593. Not really a bad retracement at all. In fact, if we go from the low to the actual low to the high that we would be looking at, that would be taking us back into July 24th. So if we go from that low all the way to the high first, and I'll go ahead and erase that, you can see really doing just slightly more than a 0.382 area. Tells you that the euro actually still had strength there. It had gotten down by getting down into that 0.382 retracement, just slightly below it. We can also see on the bottom of my chart here how it moved down into that oversold level, utilizing that relative strength indicator out there. And also right now we can see as it's making its way back up to the high out here, and it's at that 0.786 level, we can see it's also climbing towards that overbought condition out here. Each time that it's been up in this overbought condition, we can see here that it has pulled back. Now, you've gotten usually some type of bearish candle sign out there. We don't have that here yet. If the euro decides that, and it's already tagged, now what the euro has done, it's tagged the swing point high from October 17th out there. And that low is 130.505. So how the euro trades today, also very important out there as well. This is a great trading day out here. A lot of wisdom, a lot of education, because you have things making it back to certain retracement areas, or in this case here also testing a swing point. If it closes inside the 130.505, it's going to be above the 0.786. What the euro will do will make a 100% move of a move. Now, it can make that 100% move of a move overnight as well. So it can make that move overnight. It can then go ahead and pull back, and so that's why you want to be paying attention to what goes on in the futures contract. But we've got a lot of trading here left in today's trading session because we haven't even really started in the cash markets. Let's go take a look at the Japanese yen, see what the yen is doing here. We'll pull up the daily chart on the yen. The yen showing a 0.786 Gartley sell pattern. It is just hanging out at the top here. Makes a lot of sense. Remember, the yen had gotten into extreme overbought conditions, so in order to work that off, as you know, you have to either move sideways or pull back. It has pulled back just slightly, only slightly out there. Still really moving sideways out here. Still in that overbought condition out there. In fact, if we go back around the world and we take a look at the Nikkei out here, we'll take a look at the Nikkei. The Nikkei making two patterns out there, two sell patterns, and those two sell patterns being a 0.618 Gartley sell. That's the blue shaded area if you're watching us on TigerTV, or the yellow shaded area, which is a butterfly sell pattern. Now on Friday, what did we get out here? On Friday, we got that doji candle. Doji's having more meaning at a resistance area. That's exactly where the Nikkei had traveled to. Of course, what did we get today in the overnight session? Tried to take out that area, rejected it, moved lower. It was not a shooting star candle out there. This area of resistance still intact with the Nikkei. If the Nikkei does break out of this, it will travel to the 97.59, but it's really a pretty good looking trade setup to take a little short position in the Nikkei. If we go take a look, we're going to be going to break here in a moment. Let's go take a look at gold here real quickly. Oh, that's not the right chart. Let's take a look at, well, I'll tell you what, when we come back, we'll go see how these markets are going to open. We can take a look at gold and anything else that you'd like. Just give us a call at 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 53 points right now, S&P up 7, Composite up 18, small caps up 4, New York Stock Exchange up 0.4%, up 35 points. The NDX up 0.7% out here, leading the charge here this morning, up $19 and change. Transport's up $24 as well. Gold trading out right now at 17.80. As we take a look at the gold chart here, gold really looking more bearish to me. If we take a look at Friday's action, certainly Wednesday's action last week, certainly erasing any of the bullishness that I was able to see here in gold, with the dollar getting weaker here this morning, down 20 cents here. Gold not being able to move. Something to think about. What does that really set up? I think it really sets up a nice buying opportunity for gold as it pulls back. And if we take a look at silver, let's go take a look at silver here. Silver acting stronger than gold. That's a 30-minute chart. Let's try to put this on a daily chart out here for us as we take a look at silver here. Right now, really consolidating up here towards the highs. Silver actually having tested the swing point high from October 1st. The low there was 34.21. So that area, let's just draw a line across here. There's got plenty of lines on my charts here, so let's get rid of some of them. And as we take a look at the, we'll put the line across here, which is the most recent swing point high. Again, I mentioned that is October the 1st out there. That's the red line now going across the screen. Volume on the continuous contract was 48,000 shares, coming in there on Friday with 59,000 shares, but setting up a little bearish engulfing candle here on Friday. So the move for silver, which has been stronger than gold, probably very important to be watching silver here. Today, you would erase the bearish engulfing candle if silver closes above $33.75. It's at $33.72 right now. So if you're in the metals marketplace, I would be paying attention to that. Let's go take a look at some of the stocks here that are moving and grooving in the marketplace. As I mentioned, Apple to the upside, up $7 and change. So let's go see what Apple is doing out here. You know, the month did come to an end already in December, so we can also take a look at some of the monthly charts out here. Apple, having made its attacking today, it's attacking its most recent swing point high from November 29th out there. That had 18 million shares. The high there was 594.25. So far this morning, has gotten up to a level of 595.52, 1.2 million shares in the first 7 minutes of trading. Of course, we know as Apple is very front-loaded here. If Apple can clear this swing, well, that's not really a swing point. It's running into a little supply area, which is October the 26th out there. That has 36 million shares. The low of that is 591. You got a close below that both on Thursday and Friday last week. Ideally it could move up to 614, test the high out there, do it on less than 36 million shares, and says, okay, it's just trading right now in a supply line out there. So Apple not giving us any kind of indication as to whether or not it wants to continue its move back to the downside. We've got Deckers Outdoor, DECK is the ticker symbol. That is having a nice move this morning. So let's go take a look at Deckers Outdoor gapping up here this morning. Let's go take a look at this. This is actually on my watch list out here. So let's go see what it is doing now. It was taking on a swing point area, which was the October 18th level, 1.2 million shares, and was coming in with 5.4 million shares on Wednesday last week. Then the 2.6 million shares as volume lightened up on Thursday. Friday just simply started moving lower. Today we're gapping up into the next area where it broke down. That is the level here of September 19th. The price point is $43.21. That is the low portion of the gap out here. Let's take the high portion of the gap. Let's take a look at the low, which is September 19th. We'll draw the line across here. You can see that's what it's trading into. Volume-wise there, 8.3 million shares. Today so far in 8 minutes of trading, gapping up with 1.1 million shares. Other than an upgrade potentially out there, I don't see anything else. Deckers Outdoor has its work cut out for it to move higher. No question this stock here was one of the IBD, IBD 50 stocks back in October of 2011. Price point there was almost $120. Made its way all the way back to $28.53. It's why, folks, you want to make sure that you have wisdom. And wisdom means learning from your mistakes, most certainly. And it also means making sure that you use stops no matter what out there. Let's go take a look at some of these stocks here that are moving to the downside. Looks like I've lost it. Oh, no, I haven't. Splunk. SPLK out there. Splunk getting splunked. Down to about 3% this morning. Let's go take a look at the stock chart here. SPLK out there is the equity trading out at $29.36 right now. So not too bad. It did open up. It did open down, I should say. Oh, I just lost it. Let me put this back up on the chart here. I don't recall what these guys do. We'll go take a look at it here. So I'll put this chart up on the screen. Was an IPO, SPLK. Give me a second here to put this up. Obviously, they ran out of all the good names out there, so they thought Splunk was the way to go. Splunk is a software solutions provider of real-time operational intelligence. It offers Splunk, an engine that collects indexes and harnesses machine data generated by physical, virtual, and the cloud out here. So a little cloudy here on Splunk. This thing has traded all the way back to its lows. Now, the lows here were June 4th. How about that? June 4th, 2012. Moved down to the 25.15 level, 706,000 shares as that area was being tested in June. 28th, the end of June, 1.1 million shares was tested. You got a nice bullish engulfing candle on July 12th with 246,000 shares. That was the test you were really looking for, 246,000 shares on July the 12th, as was coming down with light volume and giving you a little bullish engulfing candle there. And then what does Splunk do? Moves from the low of July in the $27 and just change area and moves all the way up to a high of $39.75, 663,000 shares, September 14th. And then what does it do? Splunk moves all the way back down to test those lows again. So now July 12th, 2012 was the most recent swing point out there, 246,000 shares as it came back 722 on November 22nd. That was November 12th out there. I apologize. And then 412,000, so volume lightening up on November the 13th, forming a little doji up there, gapping up a little bit the following day with 752,000 shares. Splunk here, where is Splunk headed to? It's headed into this little supply line. It's already tested it. It did that on Friday. That is the date of October 16th out there. You can see 6.1 million shares. The low there was 30.23, moved up there, a little high wave candle on November 30th, gets up to 30.92, 8 million shares. 8 million shares moving into 6.1 million shares. So it's got volume. That was saying that it didn't want lower price, even though it gapped down here this morning. It's going to go back and certainly attack the level of $30.23, most likely $32.78 out there. That is on Splunk. Let's go take a look at the TPC group. That's down 7% this morning. TPCG is the ticker symbol out there. What does TPCG do? Of course, TPC is a great golf course, or all great golf courses. First one being up in Jacksonville, where they have that famous island hole out there. The TPC group produces and sells value-added products derived from pharmaceutical raw or petrochemical raw materials to chemical and petroleum-based companies in North America. Not selling enough as it gaps down here this morning. So let's go take a look at this equity. Let me just refresh my screen, make sure that we've got all of the right data out here. On Friday, this equity closed out near its highs in the $48.03 range. Let me pull this back even further. Yeah, so that was up near all-time highs out there, gapping down this morning, doing it with volume, coming into an area where it last broke out. So this thing here broke out on October the 8th, or its most recent breakout, I should say, was on October 8th. Well, actually, there was another small little breakout here on November the 8th out there with 777,000 shares. The low of that breakout was 46.10. That is what is being attacked here this morning. Again, you had 777,000 shares. Well, this morning it's already done 478. So it's got volume coming out of this thing, going back against the real larger breakout out here, which was with 1 million shares on October 8th. So right now, if this equity, TPCG, closes below 43.75, it should head all the way back down to volume-wise. We'll give you a big indication, but this should then head back to the October 5th breakout at about the $40.52 range. That is on TPC Group out there. Let's go take a look at Google. We've got Google moving to the upside here, up about just 0.4%, but I didn't look at Google over the weekend, so we're simply going to do that now. GOOG is the ticker symbol. I don't think I have that out here, so let's go put it up here. GOOG. Google up at the 701.47 level. Google struggling because it really is into a huge supply line. That supply line being October 18th and the 19th out there. So you can see the volume off of the top to the downside. Google actually has some troubles out here. It's going to have to really get above the highs of October 18th out at the 759.42. But right now, it's got some damage, and it is trying to repair that damage as best as possible. We've got Wynn Resorts up a couple of percent here. Computer Sciences, CSC. Let's go take a look at Computer Sciences. Computer Sciences up about, where'd she go? 4 6/10%. So let's go see if Computer Sciences is breaking it out here. It is breaking it out into an area where it lost it, meaning coming back into May 25th, moves down with a total volume of 14 million shares. Let me just expand this up here just a little bit. So what it is doing is running into most certainly a supply line. Let's take a look at the, let me draw the line across the screen here. So let's take a look at this thing. Boy, this thing has got volume all over the place, both to the downside and to the upside. What I mean by that is if you take a look at the gap down day from May 26, 14 million shares to the downside, as this thing, it had a sign of strength coming off of the bottom. It wasn't exactly right off the bottom, but it had a sign of strength with 13 million shares. So it really sets up this thing being in a consolidation. What the equity did do, though, seeing that sign of strength out here, actually gave you kind of a nice, really, trade setup if you take a look at it. So we're looking at computer sciences. CSC is the ticker symbol. So let's go line up the volumes out here as it was moving back into the lows. So we're going to put that line. We'll put this in black. Oh, that was pretty smart. Put this back to a daily chart out here. Let's go try that again. All right, so now apparently my line tool there kind of messing up. We're going to put that in red. Okay, so we're taking a look. So you got the sign of strength here in computer sciences. Again, moving up with 14 million shares. That is on February 28th. But it pulls all the way back to the area where it made a low back in November 25th, 2011, Thanksgiving, the day after Thanksgiving. 1.3 million shares. That low was $22.80. Came back here on 1.5 million shares. So it was 1.5 going against 1.3. But you had to remember that November 25th was a shortened trading session in 2011. So you'd have to really adjust for the volume. You could probably give it about a 50% type of volume. So let's say that was really about 2.6 million shares. So 2.6 million shares. As this equity came back into that area, 1.5 million shares and 5 million shares on the July 24th area, and then decides to move off. So would have been kind of a question mark there, having come back with the volume of 5 million shares out there. However, you can almost benchmark it really against the 14 million share breakout that it had. What does this equity do? Moves back up into an area that was previously a resistance. Just simply take a look at swing points out here. You could draw a line across this. You know, swing points are very important areas of support and resistance. Also great for target areas if you are trying to set up trades out here. In this case here, you can see that computer sciences made its way back up there, pulls back just a bit. If we take a look at that pullback out here, we'll come off of those lows back in the July time frame up to the high. You can see doing just under a 0.382 retracement here. That says it's got a little bit of strength. Of course, this stock chart has a ton to work through. And what I mean by that, folks, is just look at the volume that it's up against here right now, which is off of the May 26 level, 14 million shares to the downside. So there are better stock charts out here because this one shows many signs of weakness and a few signs of strength out there. I would just simply say look for other equities to trade. Let's go take a look at Wynn Resorts. WYNN is the ticker symbol. That is moving up this morning, WYNN. It is gap up, but it is certainly moving up, and this is coming up and getting above an area of resistance, nothing more than the trend line off of the highs out here. Wynn Resorts in July of 2011 traded as high as 172.58. That's really your first touch point. From a trend standpoint, the second is the May 2nd, 2012 level when it was out at 138.28. Today, Wynn Resorts getting back above that area, moving into where it had its most recent sign of strength out there. That was on October the 25th. 877-927-6648. Dow up 36, S&P up 5, small caps up 1 point. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. You got the Dow up 22 points right now, and Ford releasing November sales up 6.5% out there. Also stating that as far as number of units out here, up to 177,673 units. Looks like it is a 12-year high on sales of small autos. Now, I haven't had a chance, obviously, to dig down into the numbers, but let's go take a look at the stock chart here, see what Ford is doing. It's taking on its most recent swing point high out here, which is the level from November 6th. 51 million shares were traded on November 6th. So far this morning, 11 million shares in the first 25 minutes of trading. The high of that swing point is the 1159 area. Now, we can also see a little gap out here, a little window that looks like has acted. In fact, it has acted as a resistance area, and this is on Ford Let me see here. Let me try that. Excuse me. That is the black line going across the screen. So if we take a look at Ford, had this little bearish engulfing candle on April 27th here. A reversal day for sure. The low of that session was 11.52. The high of the next session, 11.47. So you can see the gap out there. That window was tested on the that most recent swing point there of November 6th, which held. That was 51 million shares going into 76 million shares on that reversal day and 46 million shares the day before. So 76 million shares. You can see how that area was rejected. And when it moved back and it was rejected, it couldn't bust it up. What did it try to do? Tried to come back to the last area where it had a sign of strength. That was a gap up out here, which was on October 26th. We can see that that level was tested. We'll put this line across here. Oh, my God, there comes that thing across the screen. Let's see here. I'm going to just, I wish I could get rid of it. I can't. I'm going to have to get, there we go, and I have to get rid of it this way. So sorry about that. For those of you watching on Tiger TV, I gotta find some way to disable that. I'll have Mr. Mike come in here and do that later on. Anyway, so we're taking a look at Ford. So Ford couldn't bust it up. Was going against 76 million shares, and that open window. It's got another open window to the bottom here. That is at the level of the October 26th swing point. You can see it moves up with 137 million shares. So it was Ford couldn't bust it up. It comes back and it tests the level of the gap, that window there, which now sets up a, it's only been tested once, but that is setting up your area of support out here on Ford. That's going to be the level of about, I would use the high of October 26th out there at $10.22. So assuming that Ford closes above this low of April 27th, that would be 11.52. Then what I do is go ahead and get rid of that area as a resistance area. Why? Because it's just simply what it's doing, folks. It's repairing a window. If you've got a window at home and you repair it, you don't have to pay attention to it anymore. Same thing when you're taking a look at stock charts here. So whether it's areas of support or resistance out there, when they act as areas of support or resistance, in other words, if today Ford were to close down below the 11.52 mark, then that becomes a active area of resistance out there. Where would Ford then travel down to most likely? That's right. It would come back and it would test the lows, this little consolidation that it would be in. And Ford might be a pretty darn good setup to purchase and put on your watch list here at about the $11 at the October 26th high, $10.42 out there, especially if it's coming back. I would say this time it comes back on less than 45 million shares. That would be the swing point from November 16th out there. That would set up your little consolidation range, and not too shabby. Folks, thanks for being here. The Dow is up 28 points. S&P is up 4. Stay tuned. The Money Masters show is up next. If you're off to start your day, have a great Monday. Look forward to seeing you in a few or tomorrow morning. Take care, folks.